It is a quiet Tuesday afternoon in March 2026. Eleanor, a 74-year-old retired schoolteacher from North Carolina, walks into her bank with her purse clutched tightly under her arm. She needs to withdraw $9,000 in cash to pay a contractor who is rebuilding her back porch. She has been saving for 2 years. The money is honest. The money is hers. She approaches the teller. She smiles. She slides her withdrawal slip across the counter. But something changes in the teller's face. The teller asks her to step aside for a moment. A manager appears. They invite Eleanor into a small office. They start asking her questions. Who is the money for? Have you been speaking to anyone on the phone recently? Has anyone asked you not to tell the bank? Are you being threatened? Eleanor's heart pounds. She has done nothing wrong. But suddenly she feels like a criminal. She wonders, am I in trouble? Did I break a law I did not know about? Can they refuse to give me my own money? If you have ever felt this fear at a bank counter, or if you are afraid this could happen to you, please listen carefully to the next 10 minutes, because the truth about large ATM and bank withdrawals in 2026 is not what most seniors believe. The rules are very different from the rumors you hear on Facebook or from your neighbors. Hello, my friend. I am June, your senior policy analyst at Retirement Tax and Law Pro. For many years, I have been helping retirees understand the complicated rules that touch their bank accounts, their benefits, and their retirement security. Today, I am going to explain exactly what banks are watching for when you withdraw a large amount of money. I will tell you what is legal, what is not, and what your rights are as the rightful owner of your own savings. Please stay with me until the very end. Because there is one hidden mistake that thousands of well-meaning seniors are making right now in 2026, a mistake that can turn a perfectly legal withdrawal into a federal felony. I will reveal that mistake near the end of this video. Do not miss it. Let me start by telling you about Robert. Robert is 68 years old. He lives in Ohio with his wife. He worked for 40 years as a foreman at a manufacturing plant. He retired in 2022 with a nice pension and a modest 401k. He had been building since he was in his 20s. In January 2026, Robert decided to buy a used pickup truck from a private seller. The truck cost $18,000. The seller wanted cash. Robert wanted to handle the deal quickly, so Robert thought he would be clever. He withdrew $9,000 from his bank on a Monday. Then he drove to a different branch the same day and withdrew $9,000 more. He thought he was avoiding paperwork. He thought he was being smart. He thought the bank would not notice. He was wrong. The bank's automated software flagged Robert's withdrawals before the day was over. 2 days later, a suspicious activity report was filed with FinCEN. Within 2 weeks, an investigator from the United States Treasury was on the phone. Robert was questioned for hours. He was eventually cleared because the money was legitimate and the purpose was legal. But the investigation lasted almost 6 months. His name went into a federal database, and his bank quietly closed his checking account because he had been flagged. Robert did not steal anything. He did not launder money. He just did not know the law. And that is exactly what I am going to fix for you today. Let me explain the rules in simple, plain English. There is a federal law called the Bank Secrecy Act. It has been on the books since 1970. Under this law, every single bank, credit union, and financial institution in the United States must file a special report called a currency transaction report anytime a customer makes a cash transaction of more than $10,000 in a single business day. The form is called FinCEN Form 112. The report goes to the Financial Crimes Enforcement Network in the Treasury Department. This applies to deposits, withdrawals, currency exchanges, or any combination of cash activity. The bank has 15 calendar days to file the report after the transaction takes place. Now here's the first thing I want you to understand. A currency transaction report is not an accusation. It is a routine filing. Banks file millions of them every year for completely legitimate transactions. If you withdraw $12,000 to buy a car or $15,000 to pay for a kitchen remodel, the bank files the report and nothing else happens. You did nothing wrong, you committed no crime. You simply triggered a paperwork requirement. So the report itself is not the problem. Here is what is the problem. There is a separate report called a Suspicious Activity Report, or SAR. The bank files this one when they believe a transaction looks suspicious or appears designed to avoid the currency transaction report. A SAR can be filed for transactions as low as $5,000 if the bank thinks something is wrong. And here is the part that shocks most seniors. federal law makes it a crime for the bank to tell you that a SAR has been filed, so you may never know. Now we come to the most important rule of all, and this is the hidden mistake that Robert made in our story. There is a federal law called Title 31, United States Code, Section 5324. It is a law against something called structuring. Structuring is when a person intentionally breaks one large cash transaction into multiple smaller transactions to stay under the $10,000 reporting threshold. Listen to me very carefully. Structuring is a federal felony by itself. Even if every single dollar of your money is 100% legal, even if it came from your retirement savings, your pension, your Social Security, or the sale of your home, the crime is not where the money came from. The crime is the act of intentionally splitting transactions to avoid the report. The penalty under Section 5324 is up to 5 years in federal prison and fines up to $250,000. If the structured amounts exceed $100,000 within a 12-month period, the penalty rises to up to 10 years in prison and fines up to $500,000. And under another law, Title 31, Section 53117, the government can seize the structured funds through civil asset forfeiture even before any conviction. Getting your money back can take years and require expensive lawyers. This is the trap. Withdrawing $9,500 to avoid a $10,000 report is not playing it safe. It is potentially committing a federal crime. The right way is the simple way. If you need $12,000 for a legitimate purchase, withdraw $12,000. Let the bank file its routine report. You did nothing wrong and you stay out of trouble. Now, what about ATM withdrawals specifically? Daily ATM limits are set by your bank, not by the federal government. Typical limits in 2026 range from $300 to $1,500 per day. Some premium accounts go higher. These limits are operational. They exist because ATM machines hold a limited amount of cash. You can usually call your bank ahead of time and ask them to temporarily raise your limit if you need more. For in-person withdrawals, there is no federal law limiting how much of your own money you can take out. The bank may ask you to give them 24 to 72 hours of advance notice if you want a large amount of cash because they need to bring it from the vault. That is reasonable. That is not a restriction on your rights. Now let me explain the second hidden layer. In December 2024, 6 federal agencies, including FinCEN, the FDIC, the Federal Reserve, and the Consumer Financial Protection Bureau, issued a joint statement on elder financial exploitation. Under this guidance, banks are now expected to actively watch for unusual withdrawal patterns from customers age 60 and older. What does that mean for you? It means your bank teller is trained to look for specific red flags. A sudden large withdrawal that does not match your normal pattern. A withdrawal made while you are accompanied by an unfamiliar person. A withdrawal followed by a purchase of gift cards, a wire transfer, or cryptocurrency. A senior who seems confused or anxious. A new joint account holder draining the account. Withdrawals that match the script of common scams like the IRS impersonation scam, the Grandparent scam, the romance scam, or the tech support scam. Under laws now in place in 47 or more states, banks can legally pause your withdrawal for up to 15 business days if they suspect elder financial exploitation. They can also report it to Adult Protective Services. Thanks to the Senior Safe Act of 2018, the bank and its employees have legal immunity when they report suspected exploitation in good faith. This is not the bank being nosy. This is the bank trying to protect you. According to the FBI and FinCEN, Americans over age 60 have lost billions of dollars to scammers in recent years. Once cash leaves the bank and is handed to a stranger, mailed, or converted into gift cards, it is almost never recovered. So please remember this. The IRS will never call you and demand cash. The Social Security Administration will never tell you to withdraw money to secure your account. Medicare will never ask for gift cards. The FBI does not ask citizens to mail bundles of cash. The sheriff does not ask you to pay a warrant fee in Bitcoin. Any caller who tells you these things, and especially any caller who tells you not to tell your bank, is a criminal. I know this is a lot to take in. Take a deep breath. Now let me give you the 3 exact steps you must follow whenever you need to withdraw a large amount of cash. Step 1. Call your bank ahead of time and be honest about the purpose. If you need to withdraw $5,000 or more in cash, call your local branch 24 to 72 hours in advance. Tell them how much you need and roughly when you will come in. You do not have to give an explanation, but if you are comfortable doing so, a simple sentence like, "I am paying a contractor for my roof," or "I am buying a used car from my neighbor" helps the bank understand that this is a normal transaction. This single phone call prevents almost every problem seniors run into at the teller window. Step 2. Never split a transaction to stay under $10,000. If you need $11,000, withdraw $11,000 at once. Do not split it across 2 days, 2 branches, or 2 account types. Do not withdraw $9,500 today and $9,500 tomorrow. That is structuring under Section 5324, and it is a federal felony even if the money is yours and the purpose is legal. Let the bank file the routine currency transaction report. It is paperwork, it is not an accusation, it is not an audit, it does not go to the IRS for tax purposes. Step 3. Protect yourself under Regulation E and review your statements every month. Federal Regulation E protects you against unauthorized ATM withdrawals, but the protection has a time limit. If you report fraud within 2 business days of discovering it, your liability is capped at $50. If you wait between 2 and 60 days, your liability rises to $500. If you wait more than 60 days after the statement is sent, you can be held responsible for unlimited losses. So please review every bank statement every month. If you see a withdrawal you did not make, call the bank immediately. Now, the hidden mistake that I promised to reveal. It is this: believing the person on the phone instead of the people at your bank. Scammers prey on seniors using a very specific script. They call, they sound official, they say they are from the IRS, Social Security, Medicare, the sheriff, or a federal agent. They create urgency. They tell you that you owe money, or that there is a warrant for your arrest, or that your Social Security number has been suspended. Then they instruct you to withdraw cash and either mail it, hand it to a courier, deposit it into a secure Bitcoin ATM, or buy gift cards and read off the numbers. And here is the critical part. They tell you not to tell the bank teller the real reason for the withdrawal. They tell you to make up a story. If anyone at all, ever tells you not to be honest with your bank teller about why you are withdrawing cash, that is a scam. Hang up immediately. Call your bank. Call your local police non-emergency line. Call AARP's fraud helpline at 1-877-908-3360. Call a family member. Do not move the money. The teller asking you questions is not your enemy. The teller is often the last line of defense between you and a thief. Before we end, I want to share something important with you. Please do not rely only on YouTube to bring you these important updates. The YouTube algorithm changes constantly. Important videos may never reach your homepage. Banking rules, scam patterns, and federal reporting thresholds change every year. If this video helped you, please tap the subscribe button and turn on the notification bell. Share this video with your spouse, your brother, your sister, your neighbor, your church group, anyone you love who depends on their retirement savings. They deserve to know the truth too. Bookmark these 4 official websites: consumerfinance.gov, FinCEN.gov, IRS.gov, and AARP.org. Those are the only sources you should fully trust when it comes to your money, not Facebook posts. Not text messages, not strangers on the phone. You worked your entire life to build that nest egg. You saved one paycheck at a time for decades. You have every right to access your money, to spend it, to give it away, and to live your retirement on your own terms. But you also deserve to understand the rules so you can move through the bank with confidence instead of fear. I am June, and this is Retirement Tax and Law Pro. Thank you for trusting me with your time today. Stay informed, stay calm, stay protected, and I will see you in the next video.